Hello, hi all. I welcome you to this new market update from 30th of September to 4th of October of 2024. So let's start with the world economy. Starting with the immediate neighbor Pakistan, the Pakistan government had decided to provide an additional rupees $45 billion budget, billion rupees 45 billion budget for the armed force, mainly to strengthen their capacity. This was a major push that was given to the Pakistan government by the Chinese government. They had a military interest in the region. The U.S. economy, U.S. job growth accelerated in the month of September, and the unemployment rate fell to 4.1%. So the good news from the U.S. economy. News coming from the U.K. economy for the second quarter, as compared to the second quarter of 2023, the economy had grown by 0.7%, which is slower than the economist estimate of 0.9% rise that for the year. If we look at the US 10-year Treasury bond yield, the 10-year Treasury bond yield rose and shown an upward movement. They closed at 3.9, as they were last week. They were trading close to 3.7%. If we look at the oil prices, also the oil prices given a very large up movement. They are started trading at 7.85%. Last week it was somewhere trading close to $72 a barrel. Now now the oil prices trading at $78.14 a barrel. If we look at the gold prices were also in an upward movement. Definitely, it was not a straight movement. There was an up and down movement in this week, and the final prices that gold achieved for the week was 76,190 per 10 grams, which is up by 1.68%. So we can see that all the three assets, the US bond yields, the oil prices and gold are in an upward movement. This was majorly driven by the geopolitical conflicts of the Israel and Iran, which has escalated in the last week. We now move to the another index that we have added to our discussion. This is a US dollar index. It closed at 102. If we look at it has also risen from a range where it was close to 100. Now it is close. It has come to $102. So which shows that there are some issues in the global economy, that tensions that has been building up in the economy, which is causing all these things to go up. We now look at the markets in the context of the all the things that is happening. If we look at this month of September, it started with a fairly good amount of non-escalated issues and everything, and we could see that the US market was triggered by the Fed rate cuts, and for the month it ended in a positive zone in the range of 4 to 5%. Whereas the European markets were they settled for the same zone where they were not too much high or too much down. The Asian markets, if we look at the Gift Nifty, was positive for the month. The Nikkei was down for the month, but there was a large movement that we could see in the Chinese market, where for the month the market was up by 28% after they had announced their rate cuts, and the severance package was announced by them. Now, even the Shanghai Composite was up by 70%. But if we move to the last week, after this escalation in the Middle East, we could see that the US market was flattish. The European markets were negative, whereas coming into the Asian market, there were two major impacts. There was a lot of money that moved out of the Asian market and was flooded into the Chinese market. So we could see that the Hang Seng was up by 14%, the Shanghai Composite was up by 21%, whereas the other components of the market for the week were in a negative zone. Coming on to India, India came out with their Forex reserve, which jumped by 12.588 billion dollars in the last week to hit a record high of $704.885 billion. overall. So this 12.5 billion dollar search for 1 week was the highest ever rise that we have ever witnessed, and this was for the first time the reserves have crossed $700 billion mark. Even for the week ended September 27, the foreign currency assets, which is the major component of this reserve, it has increased by 10.46 billion dollar in the last week, to accommodate close to 616.154 billion dollars. Even if we look at the gold reserves, the second part of the reserves that the country maintains, the gold reserves have increased by 2.184 billion dollars in the last week, and total accumulation has gone to the 65.796 billion dollar to this week. So India also came out with a current account deficit, which has widened by 1.1%, or 9.7 billion in the first quarter of this year, as compared to 0.5% surplus which it was in the last quarter. This was majorly because merchandise trade deficit at rose has risen during the April to June period. India also came out with their manufacturing and service PMI number. We could see that the trend has been on a decline, where the for the month of September, the manufacturing PMI came close to 56.7%, 56.7 number, and the service PMI was had a major crack from 60.9 to 57.7. But the overall structure is that we look at a number above 50 is considered as a non-contractionary zone. So the manufacturing and the services are definitely in a non-contraction zone as of now. Now we look at the overall impact of the markets, of how the FIs reacted to the overall situation in the market. If we look on if you remember, when we started this month, there was a lot of money coming into the Indian markets, and even after the Fed rate cut, we had a lot of inflow. The lower dollar was in our favor, the lower oil prices were in our favor. So, with the help of that first 3 weeks of money inflow into the Indian economy, we saw that the FIS bought close to 14,394 worth of equity. And DIIs, which were in the first 3 weeks, were approximately net sellers. They bought 29,964 worth. The real action actually happened towards the in the last week, where the last week the FIIs sold in the close to 40,511 crores worth of equity. A lot of money of this money moved to the Chinese economy. DIIs also bought, citing this opportunity, DIIs bought close to 33,074 crores worth of equity. Now let's see how the markets performed after all this on a monthly basis. On a monthly basis, we had a very good market performance, where the Sensex was up by 2.2 to 2.3%. Nifty Bank was up by 3.1%. Nifty Mid Cap was up by 1.46 to 1.7%. The Nifty Small Cap was flattish at 0.66%. So it is to be actually observed that in the monthly performance, the market performed on a very good, ended on a very good note. It was not on a very bad note, even though we had a major correction coming in the last week, where we could see that the Sensex and Nifty corrected by 4.5%. Nifty Bank was also down by 4.5%. Nifty Mid Cap was down by 3.1%, and Nifty Small Cap was down by 2.5%. So this turmoil has started from the last week, and of course the starting of this month of October has not been great for the Indian equity market. If we look at now, we move to the PE valuation. The Nifty 50 trailing PE after this correction is now 23.5, is near 2 years high and below 5 years average. Nifty Mid Cap trailing 150 trailing P is at 44.4, nearly 2 years and 5 years high. Nifty Small Cap 100 trailing P is at 35.